Hello folks, and happy summer. This is David Schlossberg from Assured Concepts Group with our educational economic update for July 2019. In this month's video, we'll be discussing some recent headlines that influenced June's stock prices. I'll also provide some perspective on what these developments may mean in the months ahead. After a disappointing May, U.S. stock markets roared back in June. The S&P 500 picked up 6.9%, while the Dow Jones Industrial Average rose 7.2%, and the NASDAQ Composite gained 7.4%. During the month, the S&P 500 reached a record high, while the Dow Jones Industrials and the NASDAQ Composite came within a whisper of the historical peaks. So what fueled the rally? Two factors did: optimism over a potential interest rate cut by the Federal Reserve, and a growing belief that the U.S. and China are actively working to solve their tariff disputes. Stock prices opened the month lower, but soon climbed on hopes that the Fed would cut their short-term interest rates. News that the U.S. would not impose further tariffs on Mexican imports also helped the rally. Towards the end of the month, however, stocks did lose a bit of their momentum due to escalating tensions in the Middle East, only to rise again on news of President Trump's positive phone call with China's President Xi. Wall Street therefore finished the month mixed as all eyes turned to the G20 summit. While markets applauded the progress on trade, attention in June shifted to the Federal Reserve and what's next for short-term interest rates. The Fed kept the federal funds rate unchanged at its June two-day meeting, followed by a dovish statement indicating it would take appropriate actions to sustain economic growth. Since markets have already assumed a future rate cut is inevitable, the potential for volatility may increase if the Fed continues to hold steady on rates. That's why this month we'll be watching the Fed closely for any signals it may send investors. Remember, the market's recent rise has been potentially driven by the anticipation of a future rate cut. If the Fed were to suggest that a rate cut adjustment is not in the immediate offering, the market may find itself repricing stocks to reflect the changing expectations. Well, that's it for this month's Educational Economic Update. Once again, this is David Schlossberg with Assured Concepts Group, signing off for the month of July 2019. Please remember that nothing we talk about here is a recommendation, and if you'd like to discuss your personal financial situation, please give us a call at 847-426-1077. We'd be happy to talk to you. And again, happy summer.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.